Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ategrity Specialty Insurance Company Holdings quarterly report. Ategrity Specialty Insurance Company Holdings offers a range of insurance products to small and medium-sized businesses in the United States. The company provides excess and surplus lines insurance and reinsurance solutions, catering to various sectors such as retail, real estate, hospitality, and construction. Their product offerings include property and casualty insurance, including general liability, commercial property, management liability, miscellaneous professional liability, allied healthcare, and architects and engineers insurance. These products are marketed and distributed through brokerage and small business channels, making it accessible to a wide range of clients. The company's services cater specifically to the needs of small and medium-sized businesses, providing them with specialized insurance solutions that may not be available through traditional insurance providers. With its focus on niche markets, Ategrity Specialty Insurance Company Holdings has established itself as a reliable partner for businesses seeking tailored insurance coverage. Ategrity Specialty Insurance Company Holdings' market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $5 billion. Ategrity Specialty Insurance Company Holdings trades at a lower price-to-earnings ratio of 10 times and a lower price-to-book ratio of 1.52 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The leverage on the balance sheet appears elevated, with liabilities of 58% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in a given period can be attributed to several key factors. Net earned premiums have seen a significant increase, rising by 34% from $78,301,000 in 2025 to $105,210,000 in 2026. This substantial growth is a major contributor to the overall revenue growth of 55%. Another notable driver of revenue growth is fee income, which has experienced an astonishing 298% increase from $560 in 2025 to $2,224 in 2026. This significant jump in fee income has made a substantial impact on the company's revenue. In addition to these factors, net investment income and net realized and unrealized gains on investments have also seen notable increases. Net investment income rose by 52% from $7,895,000 in 2025 to $12,042,000 in 2026, while net realized and unrealized gains on investments experienced a 301% increase from -$4,599,000 in 2025 to $9,464,000 in 2026. Furthermore, the company's utilities and real estate sectors have also seen growth, with utilities increasing by 4.8% and real estate rising by 54.2%. These increases contribute to a more comprehensive understanding of the drivers behind revenue growth or decline. The net income of a company underwent significant changes over time, with an increase of 219%, 221.6%, and 201.4% respectively. This substantial growth in net income suggests that the company has been performing well financially. However, the profit margin change is not as straightforward. While there are instances where the profit margin increased by 13.8 percentage points, Other information is either not directly comparable or lacks specific details. Nevertheless, it can be inferred that a decrease in loss and expense ratios contributed to an overall improvement in profitability. The reasons behind these changes are not explicitly stated in the provided text, leaving room for further analysis and investigation into the company's financial performance. The company's financial performance indicates a significant improvement in its ability to generate positive operating cash flow. In 2025, the net cash provided by operating activities was $20,954,000, which is a notable figure. However, it is the 2026 results that truly demonstrate the company's success in this area. With an increase of over $21 million from the previous year, the net cash provided by operating activities reached $42,031,000 in 2026. This substantial growth suggests that the company has made significant strides in managing its finances and generating positive operating cash flow. The analysis of the company's debt level and interest expenses reveals a significant shift over the past year. Initially, it appears that there was no substantial change in total liabilities, with an increase of only 3.1%. However, further examination shows that the debt level actually decreased significantly from 2025 to 2026. A more striking trend is observed in the company's interest expenses. The data indicates a significant decrease in interest expenses over the past year, with a notable drop of 99.1% from 2025 to 2026. This substantial reduction is evident across multiple pages, including a decrease in cash paid for interest and a sharp decline in interest expense. Overall, these findings suggest that the company has made considerable progress in managing its debt and reducing its financial obligations. Management is optimistic about the company's outlook, attributing its growth in gross written premiums to the successful execution of growth initiatives and increased engagement across its expanding distribution network. The improvement in loss ratio and expense ratio is attributed to a favorable shift in business mix, operating expense leverage, and an increase in fee income. The company's growth has also led to an increase in cash flow, which management is investing back into the business through strategic investments. One such investment strategy is the Absolute Return Utility and Infrastructure Fund, designed to deliver absolute returns with minimal correlation to energy sector indices and broader market indices. This long-term approach reflects management's confidence in the company's ability to generate earnings and its commitment to prudent financial management. By excluding non-core items from its performance metrics, management aims to provide a clearer picture of the company's underlying strengths and weaknesses. Overall, management's outlook suggests that the company is well-positioned for continued growth and success, driven by its strategic initiatives and disciplined investment approach. The company has made significant transactions in the form of acquisitions and divestitures. In terms of acquisitions, the company has invested heavily in technology assets worth $13.5 million from Zimmer Technology Group, LLC. Additionally, it has also made a substantial investment of $10 million in Midcap Limited Partnership. On the other hand, the company has also engaged in divestitures to optimize its portfolio and reduce liabilities. One notable example is the redemption of $97.2 million from Utility Limited Partnership on March 31, 2025. This move demonstrates the company's strategic approach to managing its assets and minimizing financial risks. The company's financial activities have been multifaceted. One notable aspect is its dividend payment history. According to the provided information, the company has indeed paid dividends, as mentioned on page 54 of the report. In addition to paying dividends, the company has also engaged in share buybacks. This strategy allows the company to reduce its outstanding shares and potentially boost shareholder value. The report confirms this activity, citing pages 39 and 54 as evidence of share buyback transactions. That concludes the financial summary for Ategrity Specialty Insurance Company Holdings. Feel free to comment below, and I will be happy to answer them when possible.